Hi there, traders. This is Brad Gilbert with the morning call. Now, I want to focus on a few different things here, not just Mondays are usually pretty quiet, so not just the day's trading, but also give you a bit of an overview for the week so you can start to get plan your own trading around the major events that you can get to, what days they're on, what times, what currency pairs they're going to hit, and all these sorts of things. And that's what you really need to be doing on Mondays, right? It's not the best trading day by any measure. And that's because the markets disconnect on Friday. In this current day and age, there's so much geopolitical and terrorist activity across the globe. It's wise to close your positions out and then start again on Monday. And then what traders do is they wait for the momentum to build from the weekend close, from the open on Monday. And once they see that the markets are behaving normally, they start to jump in around the technical and fundamentals once again. All right, something you should be really focusing on. But let's just see how things ended up at the end of last week or the start of this week for the major pairs. Now, the Aussie in a bit of a downtrend. You can see it's starting to trade sideways. And then just with that after the US CPI numbers, it started to just etch itself a little bit higher. The Euro, pretty much textbook as the same as the Aussie. That weaker US CPI number, only 0.1% weaker, was enough to give it a little bit of a push to the top side. And you can see here too, just note here on the Aussie, okay, and the Euro, how much room it's got to move. Now, Aussie's got like 170, but Euro, I mean, up to 122.5. There's nothing really in the way here to stop it. I mean, you'll get the big round numbers, like 120 the figure, but realistically, if we, and this is where you bring the plan into play, we get, say, weak US retail sales figures on Tuesday, and then also this week gets positive Eurozone GDP and CPI numbers. Well, then, you know what? We could see Euro 150 points higher. The market is still long dollars. Okay, we haven't had that clean out yet. You usually get the clean out, you'll see a massive stretch. We haven't had that yet. So this is where you can really piece in the data. Kiwi, well, after the US CPI numbers came in weak, we had the RBNZ. They were talking the Kiwi down, and that's why that stayed a little bit depressed, even though it's trading a little bit sideways now. And I guess it's just hard for people to get their head around sterling. I mean, it's come from 143.5 down under 135. It's now trading sideways, and we do need some fresh input. Now, we do have some UK data. We've got the US numbers as well. So it's really, I think there's a chance for a relief rally, at least 150 to 200 points, maybe back to 137. But the whole economic backdrop for sterling is very weak. So on any rally, it's a bit of a tough one. If anything, maybe waiting for it to break higher and then looking for a false break trade back down is probably the likely go there. Dollar yen just banging away sideways. It's caught up in between a bit of dollar activity and also the several geopolitical events, going on at the moment. It's sort of a little bit not really sure what it's doing, put it that way. Now, dollar CAD was trading sideways. It sort of broke down. You can see this sort of blue line where it's broken down through, looks like about 128.70. It's had a bit of a clean at the downside. The employment numbers on Friday were a little bit weaker than expected. It wasn't sort of massive, but it was enough to sort of send it back up towards that 128, the figure level. And if I just delete all those lines, you can see here 128, which is a bit of a low for all those other levels. I mean, you can see that one little volatile spike, but it is sort of acting as a bit of a pivot line, right? And with a pivot line, it basically means that traders use it. It's not like a strong support and resistance, but if they see a line or a level that has actually acted as a bit of a base, top and bottom, they will flip their positions around that pivot line. So if it goes above 128, they get long. If it goes below it or stays below it, they stay short. So it has the same characteristics as a trend line, but probably not as strong. All right, so that's where the major currencies are. Now, what I think the smart thing to do is really focus on the US dollar. Now, if I actually just come back over here and I'll just show you what I was talking about with the today's market insight, right? It's more about the week ahead, giving you a bit of a structure for what's going on, but I'm really talking about the dollar, right? The whole focus of the last 4 weeks, well, it's been the US dollar and it's been sterling. But the dollar itself has had a pretty good run the last 4 weeks as well, coinciding with that drop-off in sterling. And that's why sterling's moved so far. It's because not only was the sterling data weak, but the US data was strong. Okay, so we've got a bunch of data to focus on here. But so one of the key points I wanted to really highlight was the US dollar, right, is in control of things at the moment. So let me just bring this over here. You can get a good look at what's happening on the US dollar itself. Now, as I said, we have had a really great run here from down around 89, sort of 22 or something, I think it was, up to 93, sort of 42. Now that's a massive run, and you can see how the trend line sort of broke down through here. Okay, and what we've seen is a bit of a dribble off at the end of the week, and if anything, that's holding true at the moment. On the Monday open, it was up around 92.60. It's now at 44. So the market is respecting that short-term resistance trend line at the moment. But what does this give us? Now, we've got the US retail sales figures on Tuesday, right? So that's one thing to keep in the back of your mind, because it's a big, robust number. Don't count that out. And we've got resistance here, which is trailing the market lower. And we've also got a support level. Now, for me, this move is still on. The US dollar move is still on. Fundamentally, the Fed are still looking at least 2 rate hikes, potentially 3, depending on the data. So this is just a relief. I mean, it's rallied 400 odd points up to this point here. So anytime it's rallied that almost in a straight line, you're going to get some sort of pullbacks. Now, the real pullback is towards 91.80. Okay, this is where it is. So until 91.80 breaks, I'm thinking this thing's going to keep going higher. But what it needs is, because the CPI numbers have come out a little bit weaker, it needs another shot in the arm, right? Another steroid injection. And that's what the US retail sales figures on Tuesday could possibly give us. Now, US retail sales are strong. It goes up, right? And we've got a nice entry level. If the US retail sales are weak, depending on how weak they are, if they're only a fraction weak, well, then it's going to dribble lower. I would still consider it in an uptrend until this trend line breaks. But if it's really variant, really weak, well, then you're going to be looking to get short. And I would say it will probably break down here. And it might be enough to clean out some of the stale longs out there. We might see another 100 points to the downside. Okay. But fundamentally, a lot of things haven't changed in the US. Sure, inflation was slightly weaker, but that's about it. Everything else, the wheels seem to be falling off everything else everywhere. So, but the main thing to focus, I was going to say, don't worry about everything. Worry about the things that you can see and what you can do. So US retail sales figures really kicks off things with the US dollar. We've got clear entry levels here on the dollar index itself, right? So just keep that in mind as we go forward into Tuesday. And then as you come through Tuesday, right, if I just come back to the calendar once again, I mean, I've just been updating the MyFX Trading Hub, and just look at the events. We've got a pretty big week. It's got a really good structure to it. Okay, the RBA monetary policy meeting minutes, and that's a high impacting event. But do I expect anything from them? Absolutely not. Okay, they've been relentlessly boring, which is perfect for central banks. But so I'll still look at it, but I don't expect to get anything out of it. The Chinese industrial output, that comes out with the retail sales figures out of China as well. And that's probably a cleaner hit, even though there's a number of different variables coming out. Then you come into, this is all Tuesday, the UK average weekly earnings. You've got the claimant count change. You've got the unemployment rate as well. So, but average weekly earnings has been the major focus, a big inflationary target. So if that's dropping off, then everything really has fallen off the wheels over there in the UK, and that's going to see sterling drop off again. If there's a bounce there, well, then that sort of doesn't nullify all the weak data we've had. That may be the catalyst for the relief rally. All right, so I think we're really set up nicely technically for some really good moves. With sterling, though, you probably want to have a look about an hour or so before, because that's when things are starting to move on sterling. Someone's clearly getting the data, and it's moving ahead of the numbers. Then we've got the Euro GDP, the flash estimate, the first estimate. That's always a good one to watch. Okay, give us a bit of an idea of what's going on with the GDP numbers. Then we roll into the US retail sales figures. All right, then we've got the yen GDP numbers. And then it sort of starts to peter out. After the Tuesday, beginning of Tuesday, bit of Wednesday, most of the heavy lifting's done. And the dollar, through this US retail sales figures, should have pretty clear direction. And sterling should hopefully be given a shot in the arm here from the average weekly earnings. So once again, we're looking for the 1-2. And what I talk about here is, I don't mind if it's which way it goes. Ideally, we would like weak sterling numbers and strong US retail sales, that's where they both run with the same momentum, right? And you'll see sterling drop off again another couple hundred points. But at the same time, if UK data is strong and US retail sales are weak, well, then we're going to get a really great trade on sterling, right? And that's what you're looking for. You're looking for the connection here with the local data and the US numbers. Coming back down here to the Aussie with the this is where Aussie really finally gets a chance to do something on its own, and it's the data, right? The central bank is giving us nothing. Wage price index. Sorry, let me just correct that. Is a major release that we need to be focusing on. This is really big and important for inflation. This is like the average weekly earnings that you see around the place. That's what this wage price index is. So if wage inflation isn't going up, it means there's not going to be much other inflation because people don't have much to spend. They're not getting paid more. And you connect that dot with the Wednesday and the Thursday employment numbers. We should have a pretty clear idea of what the Aussie dollar is doing by Thursday lunchtime. That's for sure. There was one other release which I didn't mention in the market insight that needs to be paid attention. Just have a look at the US industrial production numbers. It comes out with the capacity utilization numbers too. So what they're looking for is the market at capacity, or is there got more scope to expand more? That's what that capacity utilization is. But industrial production, they do produce a lot of stuff. So if that's charging along, the economy is very healthy. It means consumers are buying. So that's your probably last dollar trade or dollar indication for the week. And then as we go, as I said, as we go into sort of Friday, we've got a couple of things here. I've included the Japanese CPI numbers and the GDP numbers. Now, these things I've highlighted in orange, so they're like mildly high impacting, but maybe medium, because the yen has been coming into play a bit, right? And so is the data. There's also some machinery orders, I think, on Thursday. I sort of left those out. That's taking it a bit too far. But the CPI numbers and the GDP numbers can potentially move the Nikkei, and you get that early trade on in dollar yen. And if the dollar's moving on dollar yen and dollar yen's moving around, well, then that's when the Nikkei can come into play, especially if there's geopolitical events cruising around the place as well. So that's why I've included those yen bits of data. And then to finish the week, we've got the CAD CPI comes out with the retail sales figures as well. But the good thing is there's no other US data to really rock the boat. So but what we're looking for, once again, like always, with the CPI and retail sales, we're looking for both numbers to be strong or both numbers to be weak, or one really strong and the other one or really strong or really weak and the other one just as expected. Then we can still potentially get a trade. Otherwise, if you get strong and weak, you're just going to have a bit of a knee-jerk both ways, and it's not a good trading situation. All right, so that's the data, right? And this major data, this is the data I see having a major impact or potentially having a major impact. Now, if we come back over here to the economic calendar, you'll see a whole range of things. I've actually taken out the low market impact data here at the moment, but there are other bits of data here as well that you need to sort of just keep tuning into. Okay, there's some German GDP numbers. There's some also German zoo numbers as well and CPI numbers. Just have a look at this at the start of Europe for the early, I think Tuesday, Wednesday, potentially even Thursday. There's some early German numbers as well, which could drift into the picture with Euro. All right, Draghi does have a bit of a speech in the middle of the week, but he's sort of opening some convention. So I'm not too worried about him coming out talking about monetary policy. I mean, I think he's more of a comedian than more trying to rock the boat like Trump is, for instance. All right, so that's where we are with the major currency pairs. As I said, keep an eye on the dollar index. Even if you're not trading the dollar index, know where the levels are and just keep an eye on the rate where it is as you go through the week, because that will give you some really insight into where the US dollar movement is across the board. Because at the moment, if you are just looking at the major charts and you don't have any idea what's going on, okay, you've got basically you've got US dollar weakness here on Aussie and Euro. It's not doing really much against the Kiwi and sterling. It's sort of strong, and then it's now sideways against the CAD and sideways up here. It's sometimes hard to isolate what's happening with the US dollar, but if you have the US dollar index there, it can just tell you what it's doing against the basket. It's a raw US dollar sort of price or indication of what's going on. And it is a big trading instrument these days, obviously, particularly in the US. All right, and that's I think that's pretty much it. It's a very busy week. We've got loads of activity on. As I said, we have made a bunch of changes to the back end. So if you are having issues getting in, give us a shout. We'll be updating the next best trades as well. Actually, this is what I wanted to show you as well. Just coming into the week. So looking at the the majors here, right? So you've got Aussie up, you've got Euro up. As I said, you just went through the general range of what's been going on. Just have a look what's happening here on the fundamental outlook now. So we've lost our core direction here on the US numbers. Weak US CPI, the Fed's still raising rates, but the core direction for the dollar is now indecisive, right? We do have some technical direction here on the other side. Like sterling is still going down. Kiwi is still bearish. Dollar Swiss, to me, well, it's still going up at the moment. It looks like it could potentially be turning, and that's where that US retail sales will come into play. And the dollar still is in an uptrend. Now, there's a few of these other pairs which aren't doing much, but this is the one thing that gives us overall direction. It's the fundamentals, right? So we've got technicals, but we don't have the fundamental drivers. So just be careful going into trading today until we start getting some of these major directional releases. And that's really important to kick things off. And that's where you need to come back, right? This is the way we've set this up, is to make it easy for you. RBA monetary policy minutes. So for me, this is 20 hours away, right? So that's the first event to be aware of. As it is, I'm sort of really looking for numbers after that, because I know, as I mentioned, the RBA aren't really doing much, but this is where we get a lot of focus here on Tuesday. China all the way down here to US retail sales. We're going to have direction here in the Aussie and Kiwi, sterling, euro, US dollar, and that means all the major pairs. All right. So that's where we'll have direction. And that's where it's going to make sense to have a look at the snapshot, because that's where we might get, once again, a brief look into either US dollar fundamental direction, sterling, or even Aussie for that matter as well, and euro, of course. Sorry. So that's where the data comes into play. So we've got this. We've got the technical side of things. We've now got to wait for the fundamental side, and that's where the easier trades will be once we get that data. All right, chaps. Well, I hope that's been helpful. If you've got any feedback for us, jump on the trade zone under the feedback section there. We can always add a few extra features to these things to improve your overall analysis. All right, guys. Hope you have a great week. I'll see you in the trade zone, and all the very best. Cheerio.